Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 12th, 2025, and we're taking a deep dive into XAUUSD, or gold, which has been making some incredibly powerful moves recently. We'll start by breaking down the current news and macroeconomic environment that is fueling this rally, and then we'll jump into a multi-timeframe analysis of the charts. So let's get right into the news. The dominant theme across financial news is the growing expectation of a Federal Reserve rate cut, potentially as early as December. Markets are pricing in a nearly 70% chance of a cut, largely due to weakening U.S. labor data and a slump in consumer sentiment. This has put significant pressure on the U.S. dollar, with the DXY index falling below 99.5, which is historically a major tailwind for gold. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold, making it more attractive to investors. Furthermore, ongoing global uncertainties, despite progress on the U.S. government shutdown, are bolstering gold's appeal as a safe haven asset. We're also seeing a consistent trend of global central banks, particularly from nations like China and India, accumulating gold to diversify their reserves away from U.S. treasuries. This creates a strong structural demand and has helped establish a solid price floor for gold around the $3,900 to $4,000 area. With all this fundamental support, many analysts are raising their price targets, with eyes on $4,250 in the near term and some institutional forecasts calling for as high as $5,000 by 2026. Now, let's see how this powerful narrative is reflected on the daily chart. Looking at the bigger picture, gold has been in a massive uptrend for over a year. We can see the price climbing steadily, culminating in an all-time high of around $4,380 in mid-October. However, following that peak, we saw an extremely sharp and volatile correction. On October 21st, the price plummeted over 6% in a single day, a massive move that shook out many long positions. The sell-off continued until the price found a solid base of support in the $3,900 region in late October. From that low, we began to consolidate and build a cause for the next move. This brings us to the last 2 weeks, where the fundamental news of a potential Fed pivot has ignited a new rally. The price decisively broke back above the critical $4,000 psychological level around November 7th. The last 2 trading days, Monday the 10th and Tuesday the 11th, have been exceptionally bullish, with a combined gain of over 3%, pushing the price to its current level of around $4,142. This price action directly correlates with the firming expectations for that December rate cut we just discussed. The key takeaway from the daily chart is that the long-term uptrend is intact, and the recent correction has been followed by a powerful, news-driven recovery. Let's switch to the 1-hour chart and zoom in on the price action since the breakout above $4,000 began. Looking here at the action from November 7th, we can see a clear and structured uptrend. The market has been carving out a series of higher highs and higher lows, which is a classic sign of bullish strength. There have been small pullbacks along the way, but each dip has been bought up, showing strong demand. The low of yesterday's session, around $4,096, now serves as a key short-term support level. As long as the price remains above this level on the hourly time frame, the immediate bullish structure is maintained. The immediate resistance is the high of the recent push, right around $4,148. The price action into the close of yesterday's session shows a bit of consolidation just below these highs. This could be interpreted as the market taking a breather before attempting the next leg up. Now, for an even closer look, let's drill down to the 15-minute chart for yesterday's session, November 11th. Here we can analyze the intraday flow. The day started with a continuation of the rally, pushing to new highs before entering a period of sideways consolidation. This consolidation held above the $4,120 level, which acted as good intraday support. Later in the session, buyers stepped in again, driving the price up to that peak of $4,148. We can see a small pullback from that high into the close, which is very typical as intraday traders take profits. This price action reinforces the levels we identified on the hourly chart. The key intraday support to watch for today, November 12th, will be around the $4,120 to $4,125 area, with the major line in the sand being that $4,096 low. To the upside, a break above the $4,148 high would signal a continuation of the trend. This micro view shows us that while the overall trend is up, there are periods of pause and pullback which can offer opportunities for entry. Okay, let's go back to the daily chart to synthesize all this information and form a clear outlook. To recap the most important price levels, our immediate resistance is the recent high at $4,148. A break above that level opens the door to the next major resistance zone around $4,200, which is both a psychological level and a key area from the price action in October. Above $4,200, the ultimate bullish target would be a retest of the all-time high near $4,380. On the downside, our first line of support is the recent low around $4,096. A break below that would suggest a deeper pullback is underway, with the next major support zone resting at the critical $4,000 level. So, what's the verdict? The bullish scenario seems most probable, given the powerful fundamental narrative and the strong technical momentum. I would place the likelihood of a continued push towards $4,200 at around 70%. This would be reinforced by continued weakness in the US dollar and any further economic data suggesting the Fed will cut rates. The bearish scenario would involve a failure to break above $4,150, followed by a break below the $4,096 support. This could be triggered by a surprise statement from the Fed pushing back against rate cuts or a sudden bout of dollar strength. I see this as a lower probability, perhaps around 30%, but it's crucial to watch for. Looking ahead, keep an eye on the US ADP employment data mentioned in the news, as labor market figures are a key input for the Fed's decisions. In summary, the trend is your friend, and right now, the trend is clearly up, but be mindful of the key levels we've discussed. Thank you for watching this analysis on Explain the Charts. Please remember, this content is for informational purposes only and is not financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Don't forget to like and subscribe for more in-depth chart breakdowns.